Hey there, when people hear the word Iran, they usually think of nuclear talks, conflicts with Israel, and sanctions. And sure, those things matter. But there's one thing most people don't realize about Iran. Iran should have been rich, super rich actually. It has oil, gas, minerals, a strategic location, farmlands, and millions of young, educated people. It should be booming. Instead, the currency keeps collapsing, foreign companies stay away, and inflation is out of control. Sanctions are a major factor, no doubt, but sanctions aren't the only reason. So in this video, we're going to break it down. We'll look at Iran's massive potential, the system that controls it, how sanctions affect Iran, how inflation and stock booms are connected, and finally, the high cost of Iran's geopolitics. And disclaimer, this is a sensitive topic, but this video isn't about political debate. It's about understanding how Iran's economy really works and survives. Let's get started. Section 1. Iran should have been rich. In 2025, Iran's total economy is worth about $463 billion in nominal terms. That might sound big, but for a country with 92 million people and this much potential, it's relatively low. Its nominal GDP per capita is around $53. That's lower than Ukraine, a country at war, and far behind Iran's wealthier neighbors in the Gulf. Now, if we're talking geography, many countries would envy Iran. Why? Because Iran has everything. Oil, gas, minerals, farmland, mountains, rivers, and access to two major bodies of water, the Caspian Sea and the Indian Ocean. Saudi Arabia has the second largest oil reserves in the world. Iran is not far behind, ranked third. Qatar is famous for its gas, ranked third globally, but Iran is second, just behind Russia. And it's not just about resources. Iran also has a large population of 92 million, mostly young and highly educated. On top of that, its location is incredibly strategic. It sits between Europe, the Middle East, and Asia. That's why it has been important for thousands of years. And today, even more. Iran controls one of the most critical choke points in global trade, the Strait of Hormuz. Along with Oman, it guards the only exit from the Persian Gulf. So what's the big deal? If you look at a map of the Persian Gulf, oil and gas fields dominate the coastline. The green areas mark oil zones, and the red areas mark gas fields and pipelines. This region holds nearly half of the world's proven oil reserves and around 40% of global natural gas. Most major oil and gas-rich countries like Saudi Arabia, the UAE, Qatar, Bahrain, Kuwait, Iraq, and Iran somehow have their reserves mostly around this area. Nearly 20% of all oil traded worldwide passes through this one strait every single day. If it ever closes, oil and gas shipments can't leave, or they have to take a much longer, more expensive route. Global supply would drop. Prices would spike. And Iran sits right there holding the gate. On paper, all this looks like the perfect setup for a superpower, and for a moment it looked promising. In the early 2000s, Iran's GDP by purchasing power parity, or PPP, climbed into the top 17 globally, reaching around $644 billion. But today, it has dropped to around 25th globally. So how does a country with this much potential end up stuck? That's where the story begins. Section 2, a system that controls everything. In Iran, a big part of the economy isn't controlled by normal businesses. It's controlled by powerful groups that don't play by the same rules. One of the most important is the Baniads. These are massive charity trusts that were created during Iran's monarchy era. Even back then, they were criticized for focusing on property investments that benefited the middle and upper class rather than truly helping the poor. After the 1979 Iranian Revolution and the brutal Iran-Iraq War that followed, the government restructured and expanded the Baniads to support war veterans, the poor, and the families of martyrs. And for a while, they did. But today, many Baniads have grown into giant business empires that control around 20% of Iran's entire economy. There are about 100 Baniads operating across the country. They run everything from soybean and cotton farms to hotels, soft drink factories, auto manufacturers, and shipping lines. But unlike regular companies, they don't pay taxes. Why? Because they're still legally classified as charity foundations. And as you know, charities don't get taxed. On top of that, Baniads are fully subsidized by the government, don't have to publish financial reports, and only report to the supreme leader. That's why they can grow so big and powerful. So if you're just a regular entrepreneur trying to start a business, you're not just competing with big players. You're competing with ones who already control the game. Even though Baniads have turned into business empires, most of them aren't profitable. In 1999, Mohammad Forozandeh, Iran's former defense minister and also the former head of Mostazafin Baniad, one of the largest in the country, admitted that around 80% of its companies were losing money. Why? Because they're overstaffed, inefficient, and often corrupted. In 2008, estimates showed that Boniads employed anywhere from 400,000 to as many as 5 million people. That's a huge support network. If you shut them down, millions would lose their jobs. And if you include their families, that could affect tens of millions of people. So, when that many people rely on Boniads for their livelihoods, they're more likely to support keeping things exactly as they are. And that makes it easier for the government to maintain stability. To be fair, Boniads do still provide some support to war veterans and poor families, which is why some people continue to defend them. And it's not just Boniads. Other powerful groups, like the Revolutionary Guards and military-linked companies, also control major parts of Iran's economy with similar privileges. Now, there's another problem, which is subsidies. Iran spends around $100 billion every year to keep daily life affordable, including petrol, electricity, bread, and more. Of course, this helps the poor. But at the same time, it drains the national budget, especially when the economy is already struggling. Well, then why doesn't the government just remove it? Well, in 2019, Iran's government tried to reduce the significant amounts of subsidies, not even removing them, because falling oil prices had cut into the country's revenue. And that change caused petrol prices to spike and triggered massive protests across the country. So, just like Boniads, subsidies aren't just about economics. They're also deeply tied to social and political stability. Section 3. Sanctions and Isolation. We can't talk about Iran's economy without talking about sanctions. Over the past 4 decades, Iran has faced wave after wave of economic restrictions from the US, the UN, and the EU. It started after the 1979 revolution. Then came more due to Iran's nuclear program in the early 2000s. A major deal in 2015 brought some temporary relief. But in 2018, the US pulled out of the deal and reimposed heavy sanctions. So what does that actually mean? Iran can't sell oil freely. It can't use global banks to receive payments. It can't import vital machinery, airplane parts, or advanced energy technology. Foreign companies are banned from investing or building factories in Iran. Iran spent billions on its nuclear program. Iran claimed it was for peaceful civilian use, but many countries believed it could lead to nuclear weapons. That led to even more sanctions and made the economy worse. This isolation has turned Iran into one of the most sanctioned countries in the world, alongside North Korea and Russia. Iran's economy is heavily dependent on oil and gas, which make up around 60% of its export revenue. So when oil prices drop or sanctions block sales, the entire economy gets cooked. Countries like Qatar or the UAE have begun to diversify. But for Iran, sanctions, isolation, and heavy bureaucracy make diversification much harder to even begin. Iran can still sell oil to friendlier countries like China, but often at a discount to attract buyers. So in order to bring in more income, it turns to the black market. Oil gets sold through smuggling networks, middlemen, and quiet deals. And not only exporting oil, Iran also relies on the black market to import many essential products from electronics to medicine. But the black market comes with a cost. It's slower, harder, and more expensive. Imagine trying to import medicine or a machine part. You're not buying it from a factory. You're buying it from a third or fourth middleman, each one raising the price. It gets transit and changes locations to avoid detection. By the time it reaches Iran, it's late, overpriced, and sometimes low quality. But for most Iranians, they have limited choices. At the same time, most foreign investors also avoid Iran. After all, nobody wants to build a factory if they can't send or receive money internationally, import equipment, or export their products. This forced Iran to be self-reliant. For example, Iran is able to build its own car, which is impressive for a heavily sanctioned country. But again, without access to global technology, most Iranian-made cars are low quality and even overpriced. Section 4. Inflation and the stock market. Iran's currency, the rial, has lost more than 90% of its value over the last decade. In 2015, $1 was around 30,000 rials. By 2025, it's around 900,000. Yeah, you might see online that in 2025, $1 equals about 42,000 rials. But that's just the government's official rate, and most people can't actually get that rate. Instead, ordinary Iranian people use the black market rate, which has already gone over 900,000 rials for $1 in 2025, because the USD is in such high demand that people are competing to buy it, which makes the rate skyrocket. The numbers have gotten so large that people stopped using the word rial in daily conversation. Instead, they use taman, which is just the rial divided by 10. So if something costs 100,000 rials, people say 10,000 taman. It's not a different currency. It's just like Americans saying 100 grand instead of $100,000. So what caused this collapse? First, as mentioned earlier, sanctions made foreign investors pull out of Iran and reduce demand for the Iranian currency, since nobody wants to hold a sanctioned currency. Sanctions also made it harder to sell oil and gas, which are Iran's main source of income. Then things got worse when the government started printing more money to cover budget gaps. When a country creates more money without creating more goods, prices go up. And that's how inflation spiraled out of control, hitting official rates of over 40% a year and even higher for food and essentials. As the rial kept losing value, people started looking for ways to escape. Many turned to foreign currencies, gold, property, or even stocks and cryptocurrencies, not to get rich, but to avoid watching their savings value keep dropping. That's why Iran's stock market saw rapid growth during its worst economic years. Not because companies were strong, but because people were desperate to keep their money in anything other than cash. Section 5. The high cost of geopolitics. Earlier, we talked about how Iran spends billions on subsidies and supporting institutions like the Boniads. But there's another major expense, which is its foreign policy spending. To maintain regional influence and support its allies, Iran supports a wide network of proxy groups operating in other countries. These include well-known groups such as Hezbollah in Lebanon, various militias in Iraq and Syria, the Houthis in Yemen, and some Palestinian groups including Hamas. From 2012 to 2020, Iran is estimated to have spent around $16 billion supporting these groups. So why is Iran willing to spend that much? Well, for Iran, this is seen as important to maintain its position in the Middle East, but these billions were spent while the domestic economy struggled, which raises the question. Could that money have gone to upgrading infrastructure, power plants, industries, or reducing the budget crisis? So in conclusion, Iran has oil, gas, minerals, a strategic location, farmlands, and millions of young, educated people. It has everything it needs to do well. But with all the conflicts, sanctions, and bureaucracy around it, the country got stuck. The economy still runs. Somehow, even with all the sanctions, Iran has one of the biggest malls on earth. But moving forward, that's really hard. And because of all this, many educated and talented Iranians are leaving the country. According to Iran's former science minister, Reza Farajidena, Iran loses around $150 billion on its economy each year from this brain drain. And with so much potential, you can't help but wonder. What if Iran wasn't cut off from the world? Will Iran ever unleash its full potential, or will it stay not so different from now? Help us keep making videos like this by becoming a member and unlock some exclusive perks too. If you want me to make other videos explaining these topics, please like and subscribe. Thanks for watching.